Alrighty, everybody, the bell just rang here, so hopefully you guys are having a pretty good morning so far. Good morning, Hunter, Jamie, and Vicky. Man, there was a lot of big events, obviously, going on this morning with the CPI data coming out and pretty much showing that inflation is continuing to run rampant. And I'm sure a lot of people were thinking that inflation might start to go down a little bit, but as of right now, it's still staying high. Now, I will say the core inflation did come in just under last month's number of 6.2%. I believe it came in this month like right at 6%. So keep that in mind. It's still a little bit lower than the last reading, but it's a little bit above their expectation there. But nonetheless, guys, you can see the SPY is down a ton today. We talked about this a lot yesterday with the SPY, and then all throughout the day it just kept selling off. And we were going off in Discord, guys. Hopefully you guys were in there, but we had a ton of awesome plays going yesterday and pretty much all the chats, honestly. So we saw a lot of great plays, but yeah, that SPY this morning even broke below $400 all the way down to $393.94. It is definitely a brutal morning there. We're seeing the QQQ also really sell off. I noticed a lot of big stocks like Tesla, Apple, Microsoft are all kind of gapping down here in pre-market. So we are seeing a lot of stocks start to move down, guys. So whatever you guys want to see, just throw it in the chat, and of course we will look at it. But for right now, we're definitely going to get into that CPI data and everything like that, of course. As we can see here, these were the numbers that they were expected to see yesterday. So the core inflation was expected to be at 5.9%, and last month or the previous month was 6.2%. So this month ended up coming in right around 6% here. I know it's just they're talking about the overall inflation here, but I was just talking about core inflation being at 6%. I believe we will I'll have to find that in this article here somewhere. But yeah, nonetheless, core inflation is the thing I really like to look at. I know inflation overall is important as well. Here we go, right here, the core CPI right there. It says was 6% higher than the 5.9% estimate. So yeah, we're definitely seeing some crazy stuff, guys. Like it's saying here, the highest level since December of 1981. We are almost into the levels of the 70s, believe it or not. So if we keep seeing inflation fly up like this, I don't know, guys, we're going to be in some trouble. But the good news is that core inflation just barely beat the expectation, which is, I think that's pretty good to see at least. But, it's always still bad, though, to see the market fly down. And, the market was really trying to price this in yesterday, but it still ended up flying down again this morning. I will say, though, the market was really worried about this. There was a lot of fear heading into market close yesterday, and man, I feel so many people were selling out of stocks. It was kind of insane. But Hunter hit it right on the head here. He says, today we get to make fun of all the experts who are unbelievably wrong again. Good thing we don't blindly regurgitate their talking points. Yeah. That is for sure, Hunter. I'm really glad that we don't do that either. Man, it seems like all the time, all you see is just these big talking heads on CNBC like Kramer, or you'll see other people like Kathy Wood or whoever it is. They'll come out and they'll talk about inflation, and they'll try to make it sound like, inflation's not as bad as it is, or that, it's going to get better soon, or whatever it is. They're always saying crazy stuff, guys. And like Hunter said, it's always good not to, just always, like anytime you see an analyst say anything, just always take it with a grain of salt, guys. Have a mind of your own, try to think of some things that, maybe people would do in certain positions that maybe wouldn't be quite, by the book, and stuff like that. So that's a good way to think of it. But yeah, nonetheless, that's crazy. And look at right here, Hunter. What Kramer is watching Friday. White hot inflation, AMD gains, Devin makes a buy. Like we're already seeing it there. Yeah, Mike, good morning everybody. Good morning, Mike Chang, Sam, George. Thank you guys for being here, of course. Sam says being thrown back into the President Carter era of inflation. Yeah, we are actually. That's kind of insane, believe it or not, to even think about. But yeah, we kind of are. There goes that SPY though, guys, below that low of day. Like you said, Sam, if we're getting back into the Carter era of inflation, man, this market's going to get crazy. So hopefully the SPY can start to slow down a little bit. But there it goes, breaking below that low of day, and it's down to 393.20 now. at the low there, and I'm sure it will just keep going here over the next few minutes. Let's see. Let's see if it can break that low again there. I hope it does, but man, I would think it should slow up eventually. I mean, all that we've done the past 2 days is pretty much move straight down. Hey, what's going on, Peter? Nice to see you join the stream today. Thanks for always sending those inflation numbers and stuff like that in the Discord, of course. That's always very, very helpful there. But yeah, thank you so much for joining up today, Peter. If you always want to see anything, of course, just let me know. And you know, we already went over some of these CPI numbers, but we could always do that again if anybody missed those. But yeah, like I said though, guys, just the market's down a lot off of this news. There's only a few stocks on my watch list in the green, and it's the China stock. So we have XPEV up into the green, believe it or not. We have BABA up. NEO is up a little bit. So very interesting to see these China stocks continuing to run there. I mean, it's pretty interesting to see this. I mean, whenever I'm looking at stocks that are up like this, I'm seeing NEO, BABA, Baidu, Queb. Like, it's a pretty good day for China, actually, which is a bit surprising. I wouldn't have thought that would be too crazy there. So hopefully it didn't mess up. But yeah, Peter said, is something wrong with the stream in Discord? And then Hunter posted the link and he said, thanks, it's working. Yeah, there actually was. So I went live initially this morning, Peter, and whenever I went live, it said I went live, but then it said something went wrong, updating my stream settings, restart the stream. So I ended the stream, and then I restarted it, and then I shared out the link, and I guess somehow that got messed up. But I was a little bit worried it would mess something up. I honestly thought I was going to be a little bit late, guys. I didn't think I was going to make it here in time because, yeah, I didn't think I was going to make it here in time because of that error. You know, I had to restart everything and redo the thumbnail and redo the title, and it took a couple more minutes. But yeah, we ended up getting it done in time. Good thing, or good enough, I should say. Keisha says, good morning, I'm late to the bad news. Yeah, that's funny. He goes, nah, I'm good. The only thing I miss is Pow Pow's printer when it goes brr. Yeah, I know, right? We need Powell to come in and save the day, guys. Like, where's Powell at? He'll be here next week, actually. Look at this. This will make you guys pretty happy, actually. Maybe. Who knows? Let's see, though. Powell's going to be speaking next Wednesday, June 15th at 2:30 p.m. Eastern Time. That's going to be the Fed's press conference there. The interest rate decision will be at 2 p.m. Eastern Time, of course, as usual. You know, these FOMC meetings are always at the same times every single month. He always speaks at 2:30 p.m. Eastern Time, so always keep that in mind. But yeah, it's Powell's gonna be speaking next week. So this week we had CPI. Next week we have Big Daddy speaking. So it's gonna be a tough one there. So hopefully we can do good here with all these with all the big events coming up. You know, like obviously this event went terribly, actually. You know, like the market's pulling back in a big way. We have some of the favorite stocks here, like Meta down 2.2%, continuing to just sell off a cliff again. You know, big stocks like AMD were down a lot earlier this morning too. All the growth plays are pretty much down, like Palantir, DraftKings, Zoom. You know, everything like that was down at least this morning. A lot of banks I noticed were down, like JP Morgan, Bank of America. Those continued to go down as well. Like Keisha said, she's late for the bad news, and yeah, I feel you there. I mean, honestly, it's probably a good thing you're late for this one, because it's actually really bad news, believe it or not. But as we can see here, there's just so many articles about the inflation. Bringing down inflation is going to take time, patience, and pain. You can see how they're kind of talking about that in this article here. And this is very important to talk about because it really is going to take a lot of time, guys. Like, this is not just going to fall down overnight. But I will say that with the Feds raising rates, I feel like at some point the inflation should start to at least hit a bit of a top up there. So, going to be a little bit tough, but hopefully we can get through it okay over the next year or so, and maybe after that the market will kind of get back to its normal type of movement. But as they're saying here, you know, they're saying a lesson from the 80s. Kind of interesting here. It says they did some research. Let's see. It says that the Feds could need to raise rates by considerably more to bring inflation down to its 2% goal. Let's see. The paper compared the current run of inflation to the early 1980s, which was the last time price increases were of a similar concern. During that time, the Paul Volcker-led Fed took the funds rate up to 19%. Whoa, they took the federal funds rate up to 19% in 1980, guys. I mean, that is insane, causing a recession that eventually helped send inflation on a downward spiral that would last almost 40 years until the current run up in prices. But wow, guys, they had the federal funds rate at 19%, guys. I mean, that talk about insane, guys. Yeah, that is very insane. I mean, I cannot believe that is that those numbers are that high. Like, that is insane. The federal funds rate at 19%, like, wow. But what that goes to show, guys, is like this could be a really good opportunity. Maybe if after whatever happens here, if the market keeps going down and we do go into a recession or something, if that happens, it's going to create a really good opportunity. I want you guys to keep that in mind. Anytime there's a Great Depression or a recession or anything like that, a lot of millionaires are made. You're able to buy up a lot of stocks low, and you're able to really build up some of those longer term portfolios there. And it's going to be a really big deal over the next couple of years. But yeah, like they're talking about here, the inflation was insane during that time. And yeah, it's pretty insane to see how that funds rate was at 19%. Like that. I don't know if you guys ever follow the federal funds rate or not, but we were at like 0.25% for however long. I could not imagine 19%. I mean, wow, that is insane. I'm gonna actually look up a federal funds rate chart. I'm gonna try to look at like what it was. Here we go, 62-year historical chart. Perfect. It's exactly what we want. All right. Oh wow. Yeah, look at that federal funds rate, guys. Look at the 80s on this. Wow, you can see how high it really was. Looking like 2010 to 2020 where we've been, like, wow, that the federal funds rate has been insane. But look at that, guys, up to 20%, like at the high there at one point. Like, wow, that was nuts. So it looks like we might be on like a bit of like another uptrend with the rates. Obviously, obviously they're raising them. I'm curious to see how high they're gonna get though. Like, I don't think we're gonna get back up to 20% or anything like that. That was a very crazy time. So I don't know if we'll get back up to there, but it is very interesting to look back at history and kind of look at that federal funds rate and kind of show how high it really did go. So very interesting there, guys. That is insane. Mike Chang says, "Oh man, I'm never gonna retire." Yeah, yeah. Well, maybe you will over the next like 10 years, but yeah, right now it's a tough time. I don't know what situation you're in right now, Mike, but if you are getting ready to retire, man, it's a very bad time, I guess, with the market going down. What I will say, though, is that if you were into some big indices like the SPY, though, or something like that, if you were in before COVID, you're still up right now, so that's a positive. Like, if you look at some positives, at least you're still up a lot over the past, like, 3 years, so that's good, but nonetheless, yeah, I feel what you mean, Mike. It's always tough there. If you're trying to retire when the market's down. So, but yeah, anybody has any good stocks moving this morning or any questions or anything like that, just let me know and we can go ahead and go over it. Of course, as always, guys, smash that like button. I feel like we've had a pretty good week in the market. I'm not saying we've had a good week as far as movement goes, but I feel like there's been a lot of day trading opportunities and a lot of action going on that's been causing a lot of volatility, and I feel like that it's been a pretty good week to trade. Today, I feel like is going to be a very hard day to trade, but nonetheless, this week I feel like has been pretty good. Yesterday was one of my favorite days to trade in a long time. I feel like we had a lot of stocks break down in a pretty good way, and if you were looking to play puts or something, it was a pretty easy move down, and it just pretty much went down all day long there, so it was a pretty good day to trade. But nonetheless, AMD is actually not looking too bad here, guys. It's just under $100. It's coming up into that big resistance there, and who knows, maybe AMD can start to break out here hopefully we can get some nice price action back to the upside there. That is always nice and helpful there. But yeah, whenever I'm eyeing up like AMD and these chip stocks, you always have to go check out Nvidia and some of the others. It's interesting this morning how Nvidia fell down a lot more than like AMD did. Like AMD is actually back up in the green now, believe it or not. Nvidia is still down 2%. So it's interesting to see the different price action out of them. I know that they're two totally different companies, but still, I think that's just extremely interesting. I will say I see that Benchmark adjusted AMD's price target to 135 from 125, so they actually raised the price target there, which was interesting. It says something came out from Market Watch with AMD this morning that looks good. It says AMD focuses on AI after data center success, sees annual growth of 20%. So, you know, anytime you're going 20% year over year, that's always pretty good, especially if that's out of like your data center success. I know we've been hearing a lot lately about Nvidia's data center success too. So it's very cool to see AMD now doing well in that type of space too. But yeah, it's a pretty good headline for AMD there, and it's definitely helping them move up this morning. But like I said, guys, those China stocks were popping up. You know, we have LI actually continuing to move up, maybe starting to break out there. Baidu's starting to come up. Looks like Baba's bouncing right off of 110, which is a pretty big support there. We'll have to see if they can hold. I also noticed that the cruise lines are coming up today a little bit. Like CCL has a really big pop going on here at Market Open, along with AAL, American Airlines. Interesting to see those reopening plays trying to pop back today, but I noticed that as far as movement to the upside, those are some of the better plays I'm seeing. Movement to the downside, though, unfortunately, a lot of the plays that are down are starting to come back up a little bit. But I will say I noticed Amazon was continuing down after their split. That is not good. You know, I know a few stocks like Tesla, Apple, and a couple others, after they've split recently, they've actually fallen back down after the split. And it looks like Amazon is one of those stocks that's doing that, unfortunately. And, you know, they're priced in at $112, one of the best pricings, or one of the best prices you could have bought Amazon at over the past few years. So I don't know. It's very tempting to get into cash secured puts on Amazon or just to grab shares for the longer term. Like, honestly, it's a pretty good opportunity in my eyes, guys. I don't know if you guys are liking Amazon. Some people like them, some people don't. But I know that to me, it seems like a pretty good thing there with Amazon. So, but nonetheless, guys, it's been a pretty crazy morning with all the market movement going on and everything like that. So many stocks are just continuing to sell off here. Let's see. George says, surprised to see LI break out above $30 today of all days. Yeah, this just goes to show you, George, that the China stocks have a mind of their own. You know, they move however they want to move. And, you know, if our markets are down, that doesn't always mean that the China stocks are going to necessarily explode up or anything like that. I see Hunter actually just put a really good picture here in the chat, and I'm actually going to pull that up really quick here. Hunter, I saw that you threw Amazon up on the dashboard there. I won't copy your calculator. I'll actually just open up your picture, believe it or not. Yeah, so here's Hunter's picture, guys. So you can see that he actually put up Amazon here on the chart, and you can see how after he did the calculator here, he can put in an annual return percentage, revenue growth, profit margins, PE ratios, and you can kind of see that he differentiated it a little bit. So he had 5% revenue growth on this example. On the base example, he had 8%. On the bull, 11% growth. Same thing with the profit margins. Same thing with the PE ratios. Even all this other stuff. So to see it kind of going up, though, you know, is interesting over the past couple weeks. But whenever you look at the chart here, you can see how it's kind of forecasted that Amazon could end up flowing down. What's also interesting to me, Hunter, is that the cash flow margin percent on Amazon in 2021 was negative, actually, which is pretty interesting. You can see they were positive, actually, for a long time. And then last quarter went negative. So, or I mean, last year. So that's definitely insane. But you can see how down here at the bottom, in the bullish case that Hunter put here, you can see that Amazon would only come in like at somewhere like, right here actually, $73. The base comes in at 46, then the bear is at 28.51. You can see on the chart how different that is compared to the current price points. And that's one of the cool things about the stocked up dashboard, guys. You can use this calculator and input anything that you really want, and then it can forecast you like what type of price, that stock could be at. That's one of the really cool things that Hunter and Mike did whenever they coded this up, and I know that it's a really cool thing to do. Hunter looks at that stuff all the time, and it's always so cool to see those different projections there on the chart. It kind of helps because sometimes it helps you buy some stocks at certain times. Then maybe like in this case with Amazon, maybe that just goes to show that, we might want to wait a little bit till it maybe gets down to like 80 or, something like that. That would be a lot better there. Hunter says their capital expenditures are huge and they spend so much money on delivery vehicles and planes and stuff, so their free cash flow is negative. Yeah, that makes sense, Hunter. I guess that does make sense. They're doing a lot of stuff, of course, whether it comes to opening up fulfillment centers or, like you said, planes, delivery vehicles. I know they've been getting a lot into that, I guess you could say logistics. They've been doing a lot like with logistics, kind of like UPS and FedEx and stuff like that. So very interesting there, Hunter. But yeah, nonetheless, that was really cool to see that chart and kind of see how their Amazon's still overvalued a little bit. Even on your bullish case there, they were still overvalued, which was interesting. Sam says Rivian's investment killed Amazon's cash. Yeah, that's another one of them there, Sam. I know that is another one of the big reasons why. I know that even ended up hurting Ford, which was very interesting. But yeah, Sam, that is a big deal there. Kind of forgot about that with Amazon. I always think about Ford when I think of that. But yeah, you're right. That is a big deal there with that Rivian investment. I remember Ford and Amazon. Man, I can't remember the exact percentage the Amazon owned, but I thought it was like 15% of Rivian or 10% or whatever it was. It was quite a bit, actually. I was pretty surprised that it was as much as it was. But yeah, today Amazon is just still getting killed, guys, down to 111.58. That SPY is probably starting to come back down. Yeah, it is. It's just sticking down here around the low of day today. Looks like we have Apple. Apple's actually breaking their low of day, believe it or not. So that is not good to see. Yeah, Costco is turning back over in a big way here. I hate to see that, guys. That is bad to see. Let's see Chewy. I remember Chewy was doing pretty good yesterday. Oh, wow. They actually had a pretty good pop at market open, but now they're turning over once again. But yeah. Abandoned Amusement says this is super scary times. Yeah, it actually is. I'll tell you, it's a very tough time in the market right now, guys, and you should be getting a little bit scared now. I will say I've been scared for a while, guys. Like we've been just watching this inflation go up year by year, and I'm just sitting here like, what's happening? Like, it's pretty insane here. I'll get the inflation chart up though, really quick. Hopefully this is the right chart. Let's see. Oh, dang it! They always give me the wrong one. It always gives me the wrong link there on Google. But here it is. I think this will be the correct one. Nope, this one's not the right one either. Where is it? There it is. Trading economics. That's it. So you can see here on the trading economics inflation rate, I guess you could say chart here, you can kind of see how this is getting very scary, guys. And last year the inflation started really picking back up, and a lot of people kept saying, people like Powell and people like that needed to start to raise rates, and they they waited way too long, guys. Like they didn't start tightening or raising rates until like the beginning of this year. So they just talked about it for like 6 months. Now it's finally getting out of control and they're starting to do something. And it's like, geez, like it's about time. And what happened to all those analysts? Hunter and me always make fun of them and some of the private chats and stuff like that. But yeah, like, these analysts, they've been sitting here talking transitory. They've been saying inflation wouldn't get out of control, that the economy is fine, everything like that. But man, the economy seems terrible right now. I don't know about you guys, but inflation is above levels of 2008. We're back into levels of 1981. That's what it says up here at the top. Highest level since 1981. Like, we're getting into some very scary very crazy times here, and that inflation data just did not help today, of course, but nonetheless, it's just continuing to show some upticks there. Now, if we do go to the core inflation rate, that is starting to go down a little bit. Whereas if we look at the inflation rate, you can see it actually upticked. Whereas core inflation, which excludes food and energy, went down. Keep in mind, food and energy are some of the biggest reasons why inflation are up, of course. So that's why the core inflation went down a little bit. But still, guys, I think that's still, though, a big deal that the regular inflation went up to 8.6%. That is still a very, very crazy number there. And I hate to see it, but yeah, it's a very scary time. And if we look at like a 25-year chart, we haven't been there in 25 years. We have to go to a max chart, and we're finally getting up into those levels like it says here, 1981. You might as well say the levels of the 70s, to be honest. Like you can see in 1981, we peaked at the beginning of the year and then started tanking back down. But, in the 70s, we were up more around where we are at this given price point. But yeah, it's a bad time, guys. The inflation data is terrible, of course, and what I hate about it is all the cost that this is putting on everybody. I keep seeing these articles come out, and I don't know like what people are thinking, but everybody's saying, a higher US dollar is better for the US. And then they say, a higher US dollar is better. Then they go on to say that, for example, sometimes like the economy right now, they'll say like the inflation's actually not as bad as people think, and they'll say that the regular household right now is just doing fine and all that stuff. Whereas I feel like right now the regular households are hurt way more than some of the other households. Like you look at all the prices on everything right now, like gas and food and everything like that. I think it's hurting, middle to lower income people more than anybody. So I think that's I don't know. I think that's kind of like where we're at here. All the analysts seem like they're insane. It's kind of nuts. But let's see. The real ERAQ says Fed started raising rates in 2018. Trump made them stop it. Yeah, let's go back and look at that. Let's go back and look at that federal funds rate again. Let's check it out. We were just looking at it. Let's see. Federal funds rate. Let's see. They were raising rates in 2018. Let's go see. Yeah, they were there. Looks like they were. Yep, they were raising rates in 2018. Yeah, and Trump made them stop. Yeah, I know that Trump was definitely pushing for them to raise rates a little bit, I believe. What were we talking about yesterday with Trump? Hang on. I have to get that article up. What was it called again? Hang on. Trying to think about how to... Trump... Oh yeah, Trump wants a value. Trump dollar devalued. That's what this is. Ah, here it is. This is what it was. Trump, here we go, right here. Perfect. Perfect example for you, the real ERAQ. You hit it right on the head. Right around 2020, 2019, Trump repeatedly called on the Federal Reserve to cut interest rates to devalue the dollar, while presidential hopeful Senator Elizabeth Warren promised to produce a currency value that's better for our workers and our industry. So that is a good point there, the real ERAQ. They did end up pushing for that, and we talked about that actually in yesterday's stream, but I wanted to get this article back up because it was a very good example of how Trump was pushing them to cut those interest rates there, and that is a good point. So, part of it could possibly be, Trump's fault in a way. Like if he wanted rates to stay low so long, but keep in mind that whenever he wanted them cut, keep in mind that we were going through the pandemic, of course, and everything like that was happening. So you always have to remember that. But nonetheless, that is a very good point there, the real ERAQ, and I really appreciate that. Keisha goes, I'm sorry to say, but we need Trump back in office. And yeah, I don't know. I'm not going to get too political here, but, I obviously, I think that would be a better thing than what we have now. But, nonetheless, I just, the things that I feel like are bad now are more of the stuff that went on with like Afghanistan and all those other things rather than like the market per se. But still, still, it's just a very strange time, Keisha, with everything going on. But yeah, I definitely feel what you mean there. Hunter says Rivian is why they had negative net income. Their free cash flow was negative because of low operating income and higher capital expenditures. And he is still referring to Amazon whenever we were talking about them earlier. So keep that in mind. We talked a lot about them with having those delivery vehicles and the planes and everything like that. And yeah, that's definitely going to hurt that free cash flow there, Hunter. But yeah, that is a good point. Like you said, low operating income and higher capital expenditures. And those expenditures are the planes and the vehicles and stuff like that. So just in case anybody is a little bit confused by that at all. The real ERAQ says it was right before the pandemic, end of December 2018. Fed rose rates, market tumbled, and Trump put out a full court press on the Fed to lower rates when the economy was allegedly good. Let's go look at it because, we can see at least, I get what you mean. He could have been pushing them to lower those rates. But I will say that, like, looking at the federal funds rate chart here, you can kind of tell that if we go, here we go, perfect. So you can see that the rates were kind of falling there in like June of 2019. So I don't know like when he was pushing for that, but it does seem like that was just before the pandemic. So I see what you're saying, the real ERAQ. It definitely did seem like it happened there just before. But nonetheless, though, that's still pretty interesting to look at. And I see what you're saying. Those rates did end up coming down there. Or they were at least falling right as that pandemic was starting. And then they really went low. But yeah, I see what you mean. They did start pulling back a little bit. And I will say, I wonder if that was during that China crash. Because do you remember the China crash, the real ERAQ? A lot of people don't even really remember this. Maybe they were just, new to the market or something. But, we had the pandemic in, February of 2020, which is where those rates really started falling. But in 2018, at the end of 2018, beginning of 2019, that is whenever we had that China crash. And that's whenever Trump wanted to devalue the dollar. So, yeah, I guess you're right there, the real ERAQ. I definitely see what you're saying because I remember during that whole entire time, the reason that we were down was because of our trade disputes with China. I don't know if anyone remembers, but we had tariffs and there was like a big tariff war almost at the time going on. And there was a whole bunch of crazy stuff. And I remember that Trump wanted the dollar devalued to try to compete with China more there on the trade. And I think that that's exactly what you're saying there, the real ERAQ. That is why, yeah, I know there were several mini China crashes, but this main move down here was mainly due to because of like those China tariffs and stuff, I believe, that were going on at that time. They did start to get better though after a little while, but I remember it was brutal. And for a while, we were having a huge trade dispute with China, so bad that we even had to like give relief to the farmers and all types of stuff like that. I remember Trump had to have some special bills come out to help the farmers because China was starting to say that they weren't going to buy some soybeans and, all types of stuff like that. So, yeah, I know it was a crazy time there, the real ERAQ. There was a lot of different data points happening and stuff like that around that time. And I do remember, you're right, anytime he would tweet, the market would like crash. It was actually pretty funny, believe it or not. Everybody was pissed at the time. They were like, damn it, just stay off of Twitter, you know what I mean? But I thought it was a good thing he was doing, trying to get the US a little bit more independent and trying to get us better deals with China as well, because as we know, China was kind of reaming us. They would have like 80% tariffs on us and we would have like a 5% tariff for them for the same product. So I'm glad that he tried to even the playing field a little bit, especially because China, has been talked about as, taking over the US as the best economy in the world and all this stuff. And, it's happening every year. It seems like they're getting a little bit closer. So we'll have to see what happens over the next 10 years or so. But hopefully, the US can stay on top. But really good conversations there, the real. I'll just call you the real. I think that was a really good thing to say there. And yeah, really good points. I know that he was trying to devalue that dollar, and cutting rates was part of the reason that he wanted that to happen. But yeah, really good conversation. And I always love talking about stuff like that. I love going back in the past and looking at some of those things that have happened with rates and the dollar, and obviously like oil and gold and everything like that during those times. It's always interesting because that's kind of during that time was kind of like whenever I learned how the dollar's correlated to the market, and how the market moves compared to rates, and stuff like that. That's kind of where I kind of took my footsteps into that type of trading, I guess you could say. But yeah, thanks for the nice conversations. But while we were talking there, the SPY continued lower, down 2.4%. Definitely breaking lower today, guys, all the way down to 391.23 now at the low. And it's still looking pretty explosive, actually. I'll tell you, it's definitely not a good look here. The QQQ, I'm sure, is looking just as bad. And yes, it is. It is down a ton. Let's see /YM. The Dow futures are down 35 points. I mean, that is insane, guys. Sam says China 100-year war against the West. Yeah, I know, right? It's like we've been in like a humongous Cold War or something like that for a while. I remember, Sam, whenever I was growing up, I kept playing all these games like Call of Duty, like Modern Warfare 2, and Call of Duty and all this stuff, and it always had the U.S. versus China and Russia. And I'm a little bit scared that one day that might end up happening. But it's pretty crazy to always talk about China and Russia and all those crazy countries over there, because at one point something might end up snapping, and I hope not. But whenever you have the leader of China declaring himself emperor, and that he's going to be emperor for life, I mean, it's kind of getting insane at that point. I don't know what he's doing, but I mean, hey, he came out and declared himself emperor, guys. I mean, could you imagine if Trump became president and then he said, all right, guys, I'm now the emperor? Like, could you imagine that? Like, that would be, could you imagine all the protests and how crazy the United States would become if that happened? And like in China, he did that and it like barely even made the news. Like, oh, President Xi declares himself emperor. Here we go. Let's see. Maybe it's not real. I think he might have just declared himself president for life, but maybe it wasn't emperor. Let's see. Oh, okay. Yeah, I think it was that. Okay, that's what it is. That's what it is. It's just that he became president for life. So don't quote me on the emperor thing, but he might as well have became emperor. If you're president for life, I mean, that pretty much is emperor to me. I mean, I know emperors are supposed to be, doing a whole bunch more stuff, but yeah, that is funny there, Sam. I mean, and it is weird, I will say, that this guy has, done this. Look at this. China imposed a 2-term limit on its presidents since the 1990s. You can see, but Mr. Xi, who would have been due to step down in 2023, defied the tradition of presenting a potential predecessor during October's Communist Party Congress. Instead, he consolidated his political power as the party voted to enshrine his name and political ideology in the party's constitution, elevating his status to the level of its founder, Chairman Mao. And that pretty much, what was Mao? Like, let's go look back. Who was Chairman Mao? All right. And I'm pretty sure, let's see, it says he was the former president, born in 1893, died in 1976. And they're saying that he was, of course, the president. But, keep in mind that a lot of these guys rule for so long that sometimes it can be a little bit crazy. I'm sure a lot of people referred to this guy as an emperor probably at the time. The only reason I wanted to say this is because it's a really big deal, because that Xi guy declared himself president for life, guys. Like, that is insane. Like Sam says, like Putin, He's been in power for decades. Yeah, exactly. Putin has been in power for decades, and it's kind of insane. You know, he controls so much stuff over there, and he also controls, you know, like Russia is technically a democracy, but the way that they control the political lines and the way they control everything over there is just making it worse and worse. Wow. Yeah, but Disney, guys, right at $100. This is actually pretty big. I saw Mike put this in Discord, and I thought maybe it would be good to come look at it really quickly, but Disney's fallen down actually right at $100 a share, getting pretty low today, which is nice, and it's getting pretty low, like I said, down to 100. If we end up breaking below that, who knows how much lower we're going to end up going, but terrible day today for Disney. I noticed Blink today was down 8.4%. Blink was actually having a pretty good move yesterday, but man, they gave back all of that good movement recently today and just tanked down. Same thing with Asana. Poor Asana's back to $20 a share again. Man, these stocks, they just keep faking out. Like they try to run up and then they're giving the gains right back. ChargePoint's another one. Wow, that is just such a crazy move to the downside. Like, guys, you got to take advantage of these downward moves here. Like, this is nuts. Like, I know yesterday I was playing SPY and a few of those other plays, but man, I mean, even SPY today would have been good. It's almost down to 390 even. Wow, I mean, we are seeing a big sell-off out of the market. At this pace, I mean, if this continues in the next week and we don't start to slow down a little bit, we might end up breaking below that low of 380. And honestly, I could see the SPY coming down towards that 1,000 SMA, maybe somewhere around 350. I could even see it possibly going lower than that, but you know, that's just kind of like a shorter term move down to 350 if we do break below 380, that is. But yeah, I don't know if you guys are scared about the SPY or not at all, but if you guys know anything, just let me if you guys have any levels you're looking at on SPY or anything like that, let me know and I'll look at it on the chart, because to the downside, I'm kind of looking down there at the bottom somewhere around like 350. I don't know, maybe you guys will think it won't fall under 380 or something like that. Just let me know, because some people still think the markets are doing quite well, actually, even though all these numbers are insane. Hunter says he wants Disney to fall $20 more. Hey, you know what? I don't own any Disney right now, so I wouldn't mind, Hunter, if they did. I hope they do, actually, now that you said that. But yeah, if they fall, I'll pick up more lower. But yeah, they've been having some issues too. You know, I know they had to restructure some stuff in Florida, where Florida did something with their tax. Yeah, I could honestly, I'd be happy if a lot of stocks kept going down, to be honest. I know a lot of stocks are still pretty high. Like, obviously the SPY's down quite a bit here over the past few months or this year. Same thing with like AMD and stocks like that. But, you know, it looks like they're continuing lower. And if they do, you know, you just get to pick up more at a good price. So that's why Hunter wants it down, because he can just buy up a whole bunch over the next couple years. So yeah, I know what you're saying there, Hunter, for sure. Yeah, if you guys have any stocks you want me to check out, just let me know in the comments, obviously. It'll be a really big help, of course. And right now, just so many stocks are falling off. I hate to sound like the Grinch here, but man, it's just everything's falling down. Like Fubo here, unfortunately. Oh, they're continuing to be a penny stock ever since they fell below $5 a share. But yeah, there's just a lot of negative price action, of course. That CPI data, guys, of course, was not what we were looking for. We obviously were hoping for some better movement out of that, but yeah, it was ended up becoming brutal today, and I hate to see the market continuing to sell off this much. You know, it's like at some point I'd like to see it slow down, but at some point, like at the same time though, you know, it's like I like picking up stocks lower. It's just, hey, I'd like the stock market to go up sooner rather than later. You know, I'm trying to buy a house and start a family. You know, it's not easy whenever stocks are going down 50% plus, especially on like DraftKings and stocks like that lately. Like, man, those poor stocks. I feel bad. They're at $13 and they were at what? Just a couple months ago they were at like $30. So it's like, man, it's been brutal the past couple months, but you know, I think they will end up coming back at some point. It's just kind of waiting for them. LI though, guys, is even pulling back today. I know some of those China stocks were running up. I did notice that Oxy is coming back up into the green, believe it or not, along with ZOM. So maybe we'll see those two stocks start to rise up today. I also noticed Dominion Energy was up. Crude oil slash CL was right around our price point today too. Is up like at $121. You know, it doesn't look like it's falling off or rising too much, but we are up around that high. So interesting to see crude continue to stay higher here. It's not really falling off much. Oxy, I will say some of the stocks though, like Oxy, did end up pulling back quite a bit, but I'll tell you, I don't think the uptrend's over. You know, we're continuing to see inflation rise, and with inflation continuing to go up, I think that just shows us that we could continue to see more crazy stuff go on with, of course, you know, with the inflation, but of course, like with inflation up, that just means that more prices are going to be higher, like whether it's the price of steel or the price of oil or the price of food or the price of whatever, you know, it's just going to drive those prices up. But kind of talking about steel a little bit, I will say US Steel was at $39 a share, and they fell all the way down to $22 a share today. I mean, talk about a big move to the downside. That is a terrible move out of poor old US Steel here. And I feel bad. That's a terrible move out of X. And I feel like that's not really totally warranted either. You know, it's like that's not the worst move that like we could have seen. So I don't know. I mean, you know, not saying that's not the worst move we could have seen, but I feel like that as far as X is concerned, you know, like a lot of inflationary stocks lately, like crude oil, you know, some food companies, stuff like that, were really flying up. So to see X tank off this much is a little bit surprising. I'm guessing that the price of steel probably ended up tanking back down too. But yeah, but before we end the stream today, guys, I'm going to try to look at some more news coming out really quickly here. This is, oh, look at this. U.S. drops COVID testing requirements for international travelers. That's pretty good. But what still sucks is like if we want to travel to another international company or to another international country, then we'll still have to get tested. But hey, it sounds good. You know, if someone wants to come into the U.S. from a foreign country, then it sounds like they will be fine. But yeah, let's see. Any big news today? Anything big? Anything big? We still have DocuSign. You know, DocuSign went pretty crazy yesterday, guys. Like it says here, their shares plunged 21% on profit miss. And I guess with that miss, they were downgraded. I didn't really notice any of the downgrades, but I did notice that they were tanking off yesterday in a big way. Yeah, you can see they're down to $68, almost down to that all-time low there. And if we look at like a 5-day chart, you can see how they were really low, like down there around $70 a share. And yeah, that is terrible movements for DocuSign. I actually hate to see that. That is never good. But yeah, poor DOCU is just not having the good price action people were hoping for. You know, some people I'm sure were looking for this one to fly back up with earnings. But as we know, a lot of these growth stocks have had a lot of issues lately. And this one just continues to show you that the market is nuts and earnings can go any which way. Look at that IV crush though. We were at like 100% and we fell down to 80%. I will say though, this stock moved enough that those puts are probably still up a lot. I'm going to look at some of those puts expiring today. Let's see. Wow, guys. I mean, it's actually pretty surprising, I will say. Like with DocuSign, a lot of those puts expiring today. So like yesterday before close, like for example, let's just guess, you probably would have been grabbing like, for example, maybe like the $80 put, let's say. You know, if you were playing DocuSign, if you thought it was going to go down, you probably would have grabbed the $80 put. You know, something fairly close to the money. You should have probably been getting an 85. But the $80 put today is up 236%. But the puts around the money right now at $70 are only up 120%. So, you know, pretty insane. Like, you would think that those puts might be up even more than that. But, yeah, I guess it just goes to show you that I guess buying in the money is a little bit safer. But, yeah, some of those puts, like the 80s, are up 236%, which isn't too bad. But you would think when a stock goes down 20%, that the puts would go up a little bit more. Let's check out maybe like next week's expiration, June 17th. The June 17th 80 strike puts are up 163%. So that's actually not bad. You know, it's not too far off of 230%, honestly, considering that you're getting more time too. So just interesting to kind of look at some of those options there. But yeah, today, guys, even some of these value plays are just not doing well, like Walmart, Target, Costco. Target looks pretty bad, actually, not gonna lie, guys. Like, that's coming down. Cornish, if Cornish is in here, Big Cat's coming back down on him. That is never good to see. I'd hate to see that. That is never good. Peter says JP Morgan, $120 puts. Let's see. Oh, wow. Yeah, JP Morgan's really flying. Yeah, if you short those puts there, Peter, that might not be a bad longer-term pickup. Or if you're just playing the puts in the short term, then, you know, go ahead and do that too. But, man, shorting those puts there for the long term probably wouldn't be a bad idea, as long as the market recovers up at some point soon. I will say, though, personally, I feel like I could see the market falling off a little bit more over the next few months, and I feel like the SPY might go lower. I don't know if that'll translate into these bank stocks or not, but, you know, I'm just talking straight up on the SPY. Like I said, I think I could see a nice move down to like 350 maybe or something like that. I know people probably think I'm nuts, but that's all right. You know, the market's fallen a lot more than that before, so. But yeah, I appreciate all of you joining up today. The Real, we had some really good conversations with The Real today, so thank you for joining up. Sam, Peter, of course, Hunter, George, Keisha, Jamie, Vicky. Thank you guys so much for joining up today, of course. I always appreciate you guys being here, and I hope you guys have a great weekend. You know, we always talk about stocks here in the middle of the week, but yeah, if you guys are doing anything interesting this weekend, let me know. You know, I'm not doing anything too much, actually. I think on Saturday, I'm not doing anything. I might try to like clean out my car, wash my car, something like that. But Sunday, of course, you know, I have some family stuff going on with some, I think a baby shower, maybe like a party. I think, you know, there's like a baby shower and then there's like the male version of a baby shower. I think that like I have to go to one of those. So, yeah, I have to do that this weekend. But yeah, hopefully you guys have a great weekend. And, you know, the market was pretty crazy this week, but I will say you could have made some pretty good profits if you would have played some stuff to the downside, like the SPY yesterday or QQQ or something like that. So definitely had some good movement. Sam says poor Hood, though, under $8. Ooh, yeah, Robinhood did fall down again today, didn't they? Let's see that 1 year daily. Oh, they're making new all-time lows, Sam. No, that is not good on Robinhood. Man, I feel bad for them. They might go out of business soon. No, I'm joking. I'm sure they might have to like file for bankruptcy or something, but I doubt they'll totally shut down, of course. They just need to sell some more order flow. That's all. You know, they just got to sell more order flow. Hunter says Netflix got downgraded too. NFLX. Wow, did they, Hunter? That's not good. And then what that also is not good for, it is not good for Disney. So yeah, I hate to see that. Let's see though. That is not good. Yeah, wow. Netflix, Goldman Sachs cut them. No, Hunter, that's a big cut. Goldman Sachs cut Netflix from 265 down to 186. And I know that we're around 186 now, but wow, they had that target up at 265, guys. And they cut that down all the way to 186. Look at that big drop we had recently, though. Like, man, that is a big cut, Hunter. That is a really good one. Good eye, and thanks for putting that one out there. That is a huge cut. I think, wow, that is terrible. It looks like they also cut eBay, it said on there. Yeah, look at eBay. eBay is also down a lot today, 4.29%. Damn, that is a little bit unfortunate there, Hunter. Peter goes, Robinhood would go solvent if anything. Yeah, I guess they would. It's always weird, you know, companies when they start going out of business and stuff like that. You know, it's a little bit weird how they start moving. You know, it's obviously different, like if Robinhood had some issues right now compared to like JCPenney's. You know what I mean? Like that's You know, that's like two totally different things there. Whenever I think of stocks going under or companies going under, I always go straight to like those retailers like Blockbuster, J.C. Penney's, you know, stuff like that. As I kind of watch those stocks go under over the past like 5 years. Obviously, Blockbuster was a longer time ago, but still, it's been insane anyways. But wow, guys, this is just insane to see all this. Hunter said, Tom, check Discord. I put the Netflix things I put in the chat months ago back in there. Let's see. Is that an SM chat? Oh, yeah, there it is. Perfect. Oh, nice, Hunter. Nice, nice. That's that picture again. Let's see. Yeah, just to show how late Goldman Sachs is to the party. Yeah, I know Hunter's been talking about these stocks being overvalued for a long time. So look at how Netflix here. Hunter's been talking about this with Netflix. All right, so what is it, Hunter? It was like Netflix, Nvidia, AMD. You know, there was a few stocks Hunter's been analyzing, and he shows the chart just like this, guys, and you can see how he inputs these certain growth points at the bottom, like profit percentage, PE ratio, revenue growth, everything like that, and he inputs the numbers. So if they're growing their revenue at 8% a year, according with all of these other numbers, you know, you can see at the bull case, you know, that's going to put Netflix at $240. And you can see right now, they just changed Netflix price target down to what is it, Hunter? What did they make theirs? 186, I think it was. Yeah, 186 from that article. But you can see Hunter then also has the base at 161 and the bear at 113. So that just goes to show that whenever he was talking about this, like, what was it, Hunter, 3 to 6 months ago, you can see how it just kept going down and down and down, and we're slowly approaching, you know, that bullish case, and we broke through that. You can see how whenever Hunter posted this, Netflix was 348. You know what I'm saying? So now they're all the way down to 183. Like, whenever he posted that, they were all the way up here at the top still, and he kept saying, you know, they probably still have more room to go down. And yeah, talk about more room, Hunter. I mean, wow, that is big. Yeah, you beat Goldman Sachs to the party, actually, like you said there. That's pretty hilarious. But yeah, that is a big move to the downside there on Netflix. That is a pretty bad run. But wow, guys, that's just terrible to see. And whenever you look at the bear case there, Hunter, that's all the way down to like 113. You know, I'm sitting there in my head thinking 113, that's so low. But then I see the stock and the way it's been moving, and honestly, I wouldn't even be surprised if it went down to 113. He said he did this at like the end of December on a lot of them. Okay. Yeah, he did Netflix though. It looks like that picture, what was that picture? They were at 348. So somewhere between this, somewhere in this bottom area, probably like right here, honestly. So yeah, somewhere like right around there on this one at least, but he did Nvidia, he said, at the end of December. Let's see, do you have Nvidia? Let's see. Amazon, Netflix, Nvidia. Wow, Nvidia, even they perform bad. They were going up there for a little while in like March, but man, they started really falling back off, unfortunately. I thought maybe that good news between Nvidia and Intel might help Intel up, but man, guys, Intel is just continuing to break lower. Like I kept saying, guys, that support break with Intel was terrible here on my daily chart. I know that that's probably not the sole reason why they're down, but man, that to see them falling under that is just brutal. You know, they haven't fallen under that for years, so you know they're probably going to continue down a little bit lower. I kept telling Mike on Intel I felt like I could see it going down to $35, but I don't know. That's just my own thoughts in my head, and I own Intel, so it's not like I'm trying to, you know, make them go up or down or hope they go any certain way. I hope they go up, if anything, but I could see him going down. But yeah, Hunter did a lot of those over the past, honestly, ever since December. He's been doing it a lot. So if you guys are interested, check out that Discord, of course. In the SM chat, he goes over a ton of stuff like that with the dashboard. And of course, if you ever have questions about it, just let us know in the SM chat or the discussion, and we can kind of go over some stuff for you with it. But yeah, check out that dashboard, guys. It's a really good tool, and I will say right now with stocks being low, it's one of the better things that I think you could grab for the stock market to kind of help you pick up some stocks down here at the lows. You know, like whenever you're looking at stocks, it's always good to have a second eye, and the dashboard is not too much, guys. So here, I'll throw the link out here in the chat for you guys really quickly if I can. Hang on, I'm actually gonna have Hunter throw it in there because whenever the stream got messed up this morning, I got signed out and it did a whole bunch of crazy stuff. But yeah, Hunter, send that link in the chat for the dashboard if you can. That'll definitely be a help to me. But yeah, guys, just check out that link if you have not gotten the dashboard yet. Like I said, it is very, very helpful. You can check out anything you want. Here, I'll actually get on the dashboard now. Like we could go check out, for example, we could go look at, well, where we already are on Amazon. We go look at something like Tesla, let's say, for example. You can look at all of their big data points, all of their fundamentals. You can look at all like a whole bunch of different data points with their total debt, assets, interest expenses, operating expenses, free cash flow, margins, you know, all types of stuff like that. Cost of revenue, right here, gross profit ratio. Like there's so much stuff, and you can change these charts and set them up however you guys want to. And I'm gonna have to change mine all back around now that I'm messing them all up. But still, this just goes to show like how you guys can change all those data points. And then there's a whole bunch of stuff like the TA dashboard as well here. You can see how on the dashboard, this is probably my favorite part. You can compare two stocks. So I'm comparing here Netflix to Disney because you can kind of see how they ended up moving the same, and they're both kind of in that streaming sector. It throws on the 50 SMA, the 200 SMA, of course, and it shows their price points. And you can see how on the week they're on a downtrend, month they're on a downtrend, and it kind of shows their correlation there. So they have a correlation of 0.561, and you can see here how their prices, you know, for the most part move the same. You know, like if one stock starts falling off, then generally the other will start following along, at least based off of this chart. So it does show how those things are the same. And you can do this with a bunch of different tickers. Like you could do this with, if you wanted to compare the price of gold to the price of the SPY, for example, you can even do that. So you can see that they have a correlation of negative 0.29. You can see how gold has moved compared to SPY over the past 2 years. So gold has been a lot slower and steady, kind of like just staying within a range, whereas SPY has been more explosive and kind of going up. So you can do a whole bunch of stuff, guys. It's awesome. There's the calculator like I've been showing you all morning, where you can input a whole bunch of data points and have it calculate you out some different stuff. Obviously, though, you have to input a whole bunch of different numbers. Like Hunter showed with that good example here with Netflix, you know, it's kind of showing that even at the bullish case, Netflix was shown to go down at the end of last year. So that's really cool to see there. And there's just a whole bunch of stocks that you can do this with, and it gives you a really good buy point, because if you see the stocks go down and maybe they go down into your base level or something, then maybe it'll be a better time to grab the stock rather than grabbing it up above one of those base points. You know, whether it's the bull, the base, or the bear, you know, you guys can decide which one to buy on and input the numbers however you want, but still it'll show you like where that stock should be based on a certain amount of revenue growth. And you know, the way we've been seeing companies report earnings lately, the revenue growth hasn't been too good. So yeah, keep that in mind. But yeah, thank you guys so much for joining up today. Had a really good live stream. Of course, if you want, check out that link for the dashboard. I will say, guys, it is pretty cheap for everything you get with it. So I would definitely look at checking that out. But yeah, have a great rest of your day, guys. And hopefully you guys can have a great weekend. I know the market's going down, but you know, try to forget about that. Try to maybe do something with the family. Get out and have some fun. Peter says shop down bad, 6%. Good old Shopify. Yeah, it is down 6%, Peter. Breaking below that 350 support. That looks pretty bad there. Bravo says, hi guys, you think we're gonna make a lower low? If you're talking about the SPY, probably so. You know, I mean, today I wouldn't be surprised if 390 held up his support. You know, we're already down a lot, but I will say I would not be surprised if the SPY broke lower next week or something, just keep in mind that the SPY is going to be volatile. We're never just going to go straight down. We're probably going to have some up and down movement mixed in here, Bravo. So keep that in mind. But yeah, have a great weekend, guys. I appreciate you joining up as always. And of course, I'll be here Monday morning as at market open as usual. So have a great weekend.